All right, guys. I don't typically work with dairy farmers. My experience with dairy farmers has been occasionally I get invited to go on a trip, like with a company that wants to do like a rewards trip or something. And there was a group from the Pennsylvania, Maryland, New York, Massachusetts area that were heavy into dairy. And I went on 2 trips with these guys, and I learned very quickly that I can't drink like they do. But that's been my main experience with the dairy growers. We have a guy on our team though. His name's Robin Schmall, and he writes for DTN. And so he always tries to keep me up to date because occasionally, like if I go on market to market, they will ask me ahead of time, do you want to talk dairy? And I usually say, no, I really don't. But if we are, I've got to do my homework, and he helps me with that quite a bit. I talk to corn and soybean farmers. I grew up in the state of Illinois, had grain elevators. You know, I went to University of Illinois, was taking a marketing class. And the reason I got into risk management is the marketing class, we broke up into groups like you do lots of times in the university setting. And there was a young lady in our group that nobody knew who she was, and very attractive gal. And she came up to me when we broke up into groups and said, I want to be your partner. And I said, why is that? She said, you're the only guy in this room that knows what you're doing. And so I'm like, I may be able to actually do something with this marketing thing after all. So I just decided we're going to do risk management. My parents got out of the grain business, and I said, I am going to help guys market instead of buy their grain business out. Okay, so corn and soybeans is what I typically talk about. I talked to Paul about just kind of the gist of the message, and I will wrap as I get closer to the end about the total farm economy. But I think we can all agree that the direction of the price of corn typically determines a lot about the farm economy as a whole. And so I'm going to focus on it quite a bit. You know, are the corn and bean lows in? There will be some overlap with Susan, but we explain things a little bit differently. I would have said before the January WASDE report that corn and bean lows might not be in. Okay? The January WASDE 2 Fridays ago, man, that was a game changer. That is all there is to it. An absolute game changer. What has changed? Well, we extracted a ton of stocks out of the corn balance sheet as far as the U.S. was concerned. It was a shocking report, quite frankly. But whenever I talk to my growers about risk management, the problem that a lot of U.S. growers have had for the 23 and 24 crop years that we had excessively high fertilizer prices. And the problem is a lot of folks booked their fertilizer at very high cost, but they forgot to do something whenever they bought their fertilizer. What would that be? Sell some corn, okay? So one thing I can assure you is that whenever the price of corn is high, fertilizer is going to be high, correct? When the price of fertilizer is high, there's no guarantees that corn's going to be high enough to make it go. And so 23 and 24, we really dropped the ball. And then what adjustments do we need to be making in agriculture? And I know the first speaker, he was talking a little bit about, you know, it's kind of a preservation time. I've been telling my growers, instead of maximizing revenue right now, this is a batten down the hatches, balance sheet preservation type time frame we're in. Now, the report gives me a little bit of hope. But this slide here, I think you'll find it funny. This guy says, when I die, I want the USDA to lower my coffin so they can let me down one last time. Does anybody resound with this? Okay, but let me tell you, the USDA report wasn't actually popular with every grower that I know, you know, because a lot of these growers had the USDA telling them, hey, you know what? We're going to have this massive crop, massive stocks. And so if they didn't have enough storage for their corn, what did they do during the fall time frame? They sold their corn. And then all of a sudden we extract 500 million bushels from the balance sheet. And they're sitting here saying, what in the heck just happened? Now, I'm not throwing punches at the USDA. I've got to go speak at the Outlook Forum in Arlington here in February. I'm looking forward to going. But I would say this. It was a very interesting way that they played this whole thing out this year. First thing I want to go over is the things that U.S. growers grow at the upper right-hand corner. Every single one of them has a negative in front of it. This comes straight from the report. All right, as you can see down at the bottom, the milk class is up, and then of course dairy products down just a little bit on the butter. But bottom line is this: it's totally different with what we're growing here in the U.S. So with what we're growing in the U.S., it's a deflationary environment. 2 straight years that you've seen it. And I am going to move rather quickly today. If you want to take pictures of slides, I don't mind, but I will give you a QR code at the end where you can download the presentation yourself. Principal crop acres, 2015 through 18 were not very profitable for the average U.S. grower, okay? But you kept acreage pretty much constant. And then 2019, we're awfully wet. And we've kind of flip-flopped around a little bit. 21 and 22, most of your universities will tell you that row crop farmers had their most profitable years back-to-back they'd ever seen in their careers. And so you jumped acreage back up in 23. It stands to reason that part of the reason why we lost principal crop acres in 2024 was lack of profitability, first of all. Okay, second of all, my thing right here, I mean, I don't know what you guys are seeing personally, but in our part of the world, we're losing acreage all the time. We are losing lots of acreage, and I'm talking prime farmland in central Illinois. And so there's less tillable acres in the U.S. today than what there was in 2018. Yes or no? Absolutely. Okay, so I've got a farm just south of the community that we live close to. We bought this farm before the farmland market really took off, paid $4,500 an acre for 100 acres. The highest offer I've had from solar so far is $3,300 an acre. Now, should that be considered? Some of you will say yes, some of you will say no. It's a very touchy subject, but the bottom line is a lot of people are saying, you know what, I'm at the stage in my career, if someone's going to offer me the kind of money that I've never seen before in my career, I'm going to take it. And we're losing thousands of acres. Who's not losing acreage in the world? Huh? Brazil, absolutely. They're gaining acres every single year. If you look at all the places that lost principal crop acres last year or planted less of total acres, clearly there was a ton of places, almost everyone. The soybean to corn ratio that Susan touched on, I'm glad that we had a different slide because what it shows you is that right now, it's the lowest that it's been at this time of year in many years. And so what does this suggest we're going to plant a lot of this year? Corn. We're going to plant a lot of corn this year. This is the crude oil chart, and I updated this just like an hour ago. And so crude oil is getting beat up just a little bit today, but I showed, crude oil goes back up towards $80. What does crude oil prices being high, how does it impact, for instance, corn and soybeans? I mean, we're going to go higher because we're growing energy, correct? But clearly, there's a ton of overhead resistance here. And now that we just went through inauguration, what is one of the main initiatives of our new president? Drill, baby, drill. Okay, so if we get to $50 crude oil again, what does this mean for a row crop farmer? Doesn't look, I mean, it's not good. And I'll tell you reasons why as we go through this. Susan talked about this a little bit, but it's very interesting to note the real is at a 22-year low versus the dollar. What does that mean? Bottom line is our products are going to be more expensive out on the world market. And then the funds. So the funds are people that really push markets around. And right now they're holding on to about a 300,000 contract long whenever it comes to corn. And guys, that is huge. If you look at the upper right-hand corner, you can see we were at a record short position for the funds this past summer. They have bought all of this corn, and we haven't even rallied a dollar. And what does that tell you? That there was a lot of corn that rewarded the market as the funds were buying these contracts. So we're going to talk about corn now. And you guys haven't really laughed much yet, okay? So I've got another joke, and I've got to be long on jokes because commodities can be tough. This is the corn producers' attempt at profitability in 2024. And that's there. Thank God. Finally found one. Okay, here we go. All right. Corn, soybean, corn supply and use. Up at the upper left-hand corner, 305 million tons of corn. The middle column, 293. So what this is saying is that we are producing less corn than what we're using worldwide. Is that bullish corn prices? Yes, absolutely. We're producing less than what we're using. So the balance sheet in the world is tightening. You look at the U.S. balance sheet, 1.763 billion bushels, 1.54. We are tightening the U.S. balance sheet as well. And if we look at it, based upon this year, don't even try to read this slide, but what I've done is I've projected around 95 million acres of corn for this year, and it's just a guess for the time being, but I do think we go up for several different reasons, and I'll show you in a minute. But if I have a 179 like this year and I keep demand constant, it gets me about a 1.963 billion bushel carry number, all right? So that's clearly more than this, and you're like this year, and you're like, why is this happening? Here's the thing: we had a lot of unsurfaced demand, and cheap corn typically does what? It cures cheap corn. And so you see all this demand come. And so if we have this massive crop this year, I'm skeptical to think that we can uncover the amount of demand that we really need to be able to gobble up all the extra bushels like we did with this particular crop year. So I'm not totally convinced that we're going to take this thing and run it substantially higher. Yes, I've got 95. I wanted to show you this chart because in 23, the U.S. grower planted around 95 million acres of corn. And so your corn to beans, beans to corn guys are saying, hey, I'm going to go back to corn this year. I was in northern Iowa just 2 weeks ago, and I asked a room full of about 100 growers. I said, how many of you guys are going to plant more corn this year? And about half the hands went up. And so here's what people are telling me. $10 beans don't work very well if you can only grow 65 bushel beans, okay? 60, 65 bushel APH growers are saying, hey, I can grow 230 bushel corn. Why in the world would I plant beans? So north of I-80, I think that you're going to plant a lot less soybeans this year. We have a grower in North Dakota. He planted 12,000 acres of beans last year. We asked him, how many acres are you going to plant this year? He said, none. I can't make it work. And it doesn't take too many of those guys to get to the point where you're starting to question acreage. Now, this slide came out in November. You've got 6 years posted here, 24 and the 5 years before that. Does one of the years stick out like a sore thumb as far as the correlation between the blue graph and the red dots? I mean, clearly 24 sticks out. What am I getting at here is that the USDA told us that we were going to have such massive ears that we were going to be able to make up for the fact that we didn't have as many ears in 24 as what we had, 2 of the previous 3 years. And so I got to thinking, this corn market wasn't acting correct this year. It wasn't acting like a 2 billion bushel carryout number. I know in your part of the world, everywhere east had a pretty rough crop, but in my part of the world, yes, we did have a lot of rain in July. We thought we were going to have huge ears. Bottom line is, this looked completely off to me, and so I wasn't completely surprised with the January report. And it wasn't the biggest yield drop ever. It was the second biggest yield drop ever. In 2020, we actually had over a 4 bushel drop in the January report. But still, that changed the scope of what this corn market would look like. So clearly, you look on the eastern third of the U.S., and you guys did not have good weather. I mean, bottom line is, this part of the world also is corn deficit. So what does basis typically look like in the eastern third of the U.S.? Just on a normal year, it's way better than what I can get. I can assure you that right now. But bottom line is, you still had record yields in parts of the Midwest. And so you look at stocks numbers. The trend of higher stocks and stocks use in the U.S. has finally turned the corner. The world numbers, guys, have continued to whittle down. And what does this mean? That means if I'm sitting here trying to think about what my corn is going to cost me, if you have an issue either for the safrinha crop in Brazil, or if you have an issue as far as the U.S. is concerned, you're probably going to see a price reaction to the upside. That is likely to be muted. And here's why. The stock situation Susan talked about, if you were in here, for soybeans, it's burdensome, to say the least. And so price action and fundamentals for soybeans could directly impact the price of corn. But I will kid you not, guys, if we have an issue, again, in safrinha crop or in the U.S., you're going to see prices of corn go higher. Now look at this. In South America, you've seen an 83% increase in corn production since 2015. At the same time, 9% in the U.S. It's just a massive increase in corn production. And what this tells me, once again, is that you're sitting in a situation, and I know Susan talked about this a little bit, but you're sitting in a situation where we continue to lose world export share, more so beans than corn, but they're growing more corn every year. Same time, we're not probably going to grow substantially more corn because, once again, we're not picking up any acres. And so it's going to be really tough for us to grow substantially more corn. Did I go the right way? Yeah, so stocks and stocks to use ratio, okay. Let's get to ethanol. So ethanol production. Ethanol production has been rather robust. One of the things that's really helped ethanol, of course, is going to be price of crude oil. Energy prices go up. You can put some margin back. At the bottom, you've got ethanol versus corn futures. You can see ethanol market. We got to the point where margins were very restricted in the late November, early December timeframe, whenever crude was in the 60s, and all of a sudden you take a $10 jump. What happens? You see margins come back in, and you're boiling through ethanol like it's going out of style. Now, this is a different slide than what she's shown. If you look, South America is exporting more corn on the world market in totality than what the U.S. for the last several years. And so whenever I talk to corn and soybean growers, the thing that I tell them, and I'll just ask you, do you think the U.S. is going to gain world export share in either corn or soybeans over the next few years or ever again? Do you guys think that will happen? And I don't, okay? How many of you guys like, for instance, ethanol? How many of you guys are fans of ethanol? Anyone? Because it's different in a room full of corn producers, I can tell you that right now. Okay? But what I tell people is you need domestic consumption of corn. We don't have enough animal units right now to gobble up all the corn, first of all. And so if you continue to lose world export share and you don't have some form of a renewable fuels program, we've got problems. That's what your chart looks like for March corn. As you can see, this yellow line here, that's your 200-day moving average over the course of the long haul. You keep charting that thing. We only spent, before we broke above it 2 weeks ago, 6 days since October of 23. So this corn market has continued to go down and down and down. And if I'm on the purchasing side, it's gotten me to the point where I don't see an initiative to really step forward and buy corn because I've been spoiled for a couple straight years with declining prices all the way along. I think we have to readjust our thinking a little bit though, because I'm afraid, once again, you could get in a situation where if you wait too long, you could have issues. Last year, guys that were trying to sell corn thought, I'm going to get a weather rally. I'm going to get something to bail me out. Guys that were buying corn were hoping to God they didn't, okay? And they didn't. The market never rallied. Be careful in that thinking this year. That's December corn. So new crop corn, as you can see, that yellow line has stopped December corn dead in its tracks for about 3 straight days. Is it going to continue? That's a really big question. I don't know the answer to it. I personally don't see the market getting super carried away until we establish a couple, 3 different things. I want to know what acreage looks like because I think if you get this market up above this 460 area that we've been trying to hit on, if you get up above 460, our next item of discussion is going to be acres. And once again, I think acres could be very strong. In fact, I think acres could get to 97 or 98 million acres potentially if the banking industry can support the guys that want to plant corn in some situations, because the bottom line is that the U.S. growers' liquidity situation for corn and soybeans is in as rough a shape as it's been in a long time. We do business with a lot of different banks, and I can assure you that some of the bankers are helping the grower, if you will, make their decisions this year. It's not all of them, but some of them. So it could factor into your acreage mix. Let's talk about soybeans. World production up 30 million tons, okay? And so essentially Brazil is gobbling up more and more production every year, but you're up 30 million tons. If I want to look at it on a balance sheet, whereas we're restricting with corn, you see soybeans from 101 to 128. So you're taking up supplies of soybeans around 27%. Now, if I told you that any commodity in the world was going to go up 27% over the course of 2 years, what would you say the price action would look like? It'd be bad, right? It'd be rough. You'd be going down. We've already gone down quite a bit. So how much of this is in the market? I mean, that's my job, is to try to figure out how much of this is in the market whenever we start talking about the direction of soybean prices. The balance sheet for the U.S. isn't overly burdensome or, I mean, it's nothing to get super excited about, but what it is it's the highest stocks to use we've had for several years. It's not as high as what they originally thought it would be, but it's the highest that we've seen for several years. And if I look at my balance sheet, it shows bigger disparities with smaller yield changes, okay? So essentially, if you take corn acres up to 97 or 98 million acres, what do you think that does to yield potential for corn? If you expand acreage like that. Let's just phrase it this way. If I'm a grower that can fallow my ground in the panhandle of Texas or western Kansas, am I going to fallow my ground with $6 corn? No, absolutely not. So if I expand acreage to start pulling some of those acres in, what does it do to national yield possibilities? Draws it down. If it draws it down because acres are so large and then you take soybean acres down enough, what might your national yield look like on beans? It might be just a little bit higher. But guys, if you don't have the acreage to work with it, maybe it keeps us from getting too out of hand. If I have a 49 bushel yield, I'm 134 million bushels. That's pretty darn tight. You see soybean yields over the course of time, soybean production 95 million bushel lower than what we saw last month, but 204 larger than last year. So why? Even though we took yield down, why? Is because we had more acres this year. So you see trend of higher stocks and stocks-to-use ratios. Again, Susan talked about it a little bit, but the bottom line is this. We're very likely going to see the most soybeans in the world that we've ever seen. Okay? And from overall feed costs go, and I know you guys aren't feeding soybean meal, but there's certainly substitution in other areas. Bottom line is this. You could see fairly reasonably priced soybean meal this year if you continue to see this sort of, what I would say, overwhelmingly large supply. Now, you might say, well, if the U.S. balance sheet's tight, you know, and here's the thing. We do have a new president taking effect. He has talked about tariffs. He's got a little bit softer take on it as of right now. He said he hasn't made any decisions yet. If we do place tariffs on China, what might China do in retaliation? Cancel soybean purchases. And if they do that, all of a sudden your balance sheet starts to get just a little bit bigger once again. If we want to look at it the same way we did with corn, a 42% increase for South American soybean production. All right, so just to let you guys know, why are they growing the way that they're growing? I was in a room in Iowa 4 or 5 years ago, and Max Armstrong was moderating a panel of Brazilian growers. The largest grower in the group had about 350,000 acres. And so clearly it's a conglomerate, huge operation. He asked, what was your gross revenue last year? And clearly they talked about this in advance, or he just wouldn't have shared it this easily. He said 250 million or so is what he said. Okay. He said, well, what was your profit margin on your 250 million? 35%. 35%. So if you're making 35% profit margin, what do you want to do? Expand. Expand. Now, in fairness, last year they had more issues from a profitability standpoint than they'd had in a long time. Yes, their bean price was not hurt as much as ours because of currency, but at the same time, they didn't experience the bean price that they wanted to see. But guys, clearly, whenever they're going to expand acreage 2 to 3% per year for 20 straight years, you're not seeing a slowdown there yet. Bottom line is these guys are growing. They're going to continue to grow, and it's going to make it an uphill battle. Now, U.S. farmer right now is talking about the Brazilian crop, up 19 million tons. That's the girlfriend, but the good-looking girl on the other side, down 6 million. So what am I saying here? Everyone's focused on this Argentine crop getting smaller. And guess what? The Brazilian crop's going to be more than enough to make up for it. So from a world supply standpoint, if I am talking to a bean grower, someone who's got beans, I'm telling them right now, if the market rallies, I'm selling it. Why? Because the long game is that we're going to have way too many beans in the world. And so South America is about 3 times in exports what the U.S. is. 3 times. And so they're basically taking most of the world's soybean market and running with it. Most likely the U.S. is not going to export more as a percentage ever again. Will they have a jump here and there? Potentially, but they're not going to as a percentage. Crush margins. If I look at crush margins, I mean, in the past in the U.S., what have we crushed beans for? Soybean meal, mostly, right? In the past, you couldn't find a home for soybean oil. What are we going to do with the soybean oil? What are we crushing beans for today? Oil and meal. And the oil and meal, why do I say that? Because crush margins, which are about as low as what we've seen for 5 years, are still around $1 a bushel. And so what we've seen over the course of the last few years is that this crush industry has really grown. You've built crush plants. You're trying to get ahead of this renewable diesel situation. If I am an originator or a purchaser of beans for a plant, and my margins are $1 a bushel, what do I have to do? I got to make sure that we are running at full capacity. And so with these new plants, it should gobble up some demand. But once again, if you lose export demand, it's going to keep your balance sheet too much, in my opinion. If I look at a chart for soybean meal, you can see we kind of jumped up there, but we fell back off. Part of that is because Argentina's weather is not as threatening as it was about 2 weeks ago. Soybean oil has been in rally mode. Why did soybean oil fall back during the middle of the fall? The reason is because California came out and said, hey, we only want 20% seed oils in the formulation of this renewable diesel mix. And so a lot of folks have said, hey, you know what, if we get this renewable industry built out and we start using renewable all over the US, we're going to see massive consumption of soybeans, which big consumption of soybeans is going to do what to the price? It's going to take it up. And people who want to sell corn, if they want to sell corn at a higher price, the number one thing that they want to see right now is the bean market wake up, okay? I don't think it's going to happen anytime soon, though. As you can see, over the course of time, crush continues to go up while exports can continue to go down. This is a feature you're going to continue to see for probably, I would say, the rest of my career. I think that's the only way that this thing can go. And then we're going to talk about the soybean chart as far as March is concerned. You haven't gotten up to that magical yellow line, and that's not the only one to consider. It's just most of these spent a good majority of the last couple years fluttering below all moving averages. And now we kind of got up above everything but the 200-day. If you really want to see the bean market take off and go, it's going to have to rally another 30 cents. Maybe if you get on the other side of it, you can get a rally going. And then that's what new crop looks like. So I want to spend the rest of my time talking about profitability and big picture items that I see going on. First thing I want to talk about, I'm not going to talk much about renewables. Susan covered this stuff fairly well, but my first slide, this is the Tesla roadside assistance vehicle fueling up the gasoline at the filling station, all right? And the reason I bring that up is, in the past, your big energy people didn't want anything to do with ethanol, okay? Renewable comes along, and all of a sudden, big energy wants to get in bed with renewable. Why? Because they were going to displace traditional diesel fuel, okay? And so over the course of time, all these guys have figured out they have one common foe. And who's that? EV, okay? Is EV going to expand? We can all agree on that, right? Where I'm situated in Central Illinois, though, I do this stuff all over the Midwest. I do farther trips as well. This last week I went to Denver, home, Tucson, Orlando, and then I drove up here and I got to go back to Orlando, okay? But if I'm at home and I got to drive, is EV going to work for me? I'm not against it, but it's not going to work for me. And in rural areas, it just is not going to work. But one line you can draw is that big energy is interconnected with grain farmers. And I know that may not be what you want to hear, but everyone's working together to try to figure out how can we combat this EV situation. You got engine manufacturers, you've got ethanol, you've got renewable, and you've got obviously big oil. And big oil is clearly a very large lobby. Now you're hitting up on what the Department of Energy says is going to be a wall, okay? So you're going to see basically no more crush expansion until we get a good idea what's going to go on, of course, with this administration. Now, this particular slide, Susan talked on this some, but used cooking oil, if it doesn't come into the U.S., now you're going to start to talk about a little bit bigger demand for other items. And one of those is likely going to be soybean oil. So over the last 40 days, you can see that Argentina has been fairly dry. These rainfall totals have not been all that great. But then in the middle is your 7-day forecast. At the far right is your 14-day forecast. And why do I bring that up? Obviously, we've talked about bean meal. Argentina typically exports 50% of the world's bean meal, historically. Okay, that is about to change. Why is that going to change? As we build out our crush industry, do we have enough animals to eat all the soybean meal here in the U.S.? No, we don't. But bottom line is, anytime you see the soybean market rally this time of year, it's likely got something to do, of course, with South America. They're clearly growing more soybeans than we are. And the first thing that you see if Argentina gets dry, Soybean meal market rallies, then the soybean market rallies, and typically it spills over into corn. So if we come in here tonight and you see the market rally substantially, it's going to be based on forecasts. Early calls right now are that we're going to take the market a little bit higher tonight. I would probably watch this if I'm looking at buying corn, because if Argentina would stay dry, it's going to be an issue. Now, if the 2-week forecast stays as it is, you're not looking at a problem, okay? This market could ease back off, but these forecasts change every 6 hours. Okay, so I would watch this very closely if I'm in the purchasing program. So this guy says, of course, I haven't made a payment on the tractor. You said it would pay for itself. So how many of you guys have been watching the equipment market in the last few months? What have we noticed? Right. How much new machinery is selling? Little to none. Okay. So if I am in the purchasing situation and I'm in the position to do it, I think there will be opportunity. I've told people all along, I think that this winter, when you're sitting in your office on February the 25th and there's an auction, you might be surprised what some of this stuff will bring. I've seen some very high dollar items, 2 years old, 50-60% of original purchasing price. And so I think that there is an opportunity here for someone who wants to buy equipment. My granddad always used to tell me, and some of yours probably told you the same, when everyone else is scared to death and no one else wants to buy, what should you be doing? That's when you're buying. And the opposite goes into place too. So let's talk about the Ag Economy Barometer. This comes from Purdue. All right, so you see the Ag Economy Barometer clearly skyrocketed right at the end of the year, right before the end of the year. What caused that? What do you guys think caused that? The election. That's exactly what caused that. And some of you may not agree with it, but Purdue, guys, they poll a ton of people for this Ag Economy Barometer. Now this one's pretty interesting. If I want to look at the index of the current conditions, boy, things haven't changed much. But if I look at it versus what we expect for the future, most people are expecting things are going to get significantly better, correct? But it's almost like, what are we thinking here? Because that disparity is about as wide as what we've seen since when? Interestingly, December of 16. What happened then? Trump was elected. Okay, and then you see what happened after the fact. It was just kind of sideways. But if I want to talk about the state of the farm economy, let's just be real clear. It's not great. Is it? I mean, it's not good at all. And bottom line for me, as we move forward here, we're in a precarious spot. People have been asking me, what is your range for the price of corn for 2025? And I typically have a fairly narrow range as far as my thinking goes. But guys, I could see $3.50 corn this year, and I could see $6 corn this year. Okay? So if I'm on the buying side, risk management might not be a bad idea. That might just be locking in some stuff as you go along, or maybe a little farther in advance than you normally do, if you can live with those prices as far as feed costs go. But bottom line is, in my opinion, you could see a wild swing, because three things could happen. Even with big acres, if the safrinha crop burns up and then the U.S. has issues, you're going to look at a corn price rally. Is it going to go to $7 and $8 like we've seen in the past? It's extremely unlikely, because I don't think you're going to see that ratio more than 2 to 1. So are you going to see $14 beans with the fundamentals we just talked about? What do you guys think? No. I don't even think we'll see 12. Okay? So I do think that they could go up, but $6 would be the absolute highest that I could see them go up. And so then how likely do you think U.S. agriculture is at risk of a trade war? And I think this is pretty interesting, because there's a few people neutral, but I mean, there's 48% that thinks it's pretty likely. And the people that they're polling here, who do you think that the predominant majority of these people voted for? Probably voted for Trump. In ag country, that's typically what we do. But bottom line, a lot of people think you're going to see a trade war. A trade war is not the greatest thing, clearly. Now, if you're on the buying side, it's not the end of the world, because what happened the last time that we had a trade war? When we put tariffs on, what happened to commodity prices? Commodity prices went down. And then in exchange for that, what happened? Trump bucks. So we gave money to the farmer. So if you're buying corn, that was actually a good thing. What are we going to see happen this time? If I'm sitting in these shoes and I'm tariff happy, if you will, I think what you got to be concerned with is that the last time we put tariffs on China, their economy wasn't in near as good a shape as it is today. Their economy is in turmoil right now compared to what it was in today. So if I'm in his shoes, do you think that we're going to put tariffs on? I think it's pretty likely, to be totally honest with you. So if I haven't confused you yet, I've tried my darndest, okay, as far as where prices are going to go. But guys, there is intense volatility this year. There's intense volatility. Now, I find this very interesting. If you want to talk about what's going on in Central Illinois, okay, and Farm Doc is a program that you can get a lot of good directions free, okay? Farm Doc is compiled at the University of Illinois, but they also take contributors from all over the Midwest. They said that the average grower, this was printed in early November, and I just want to make a point for you guys because a lot of the guys that I work with have been asking me questions about how high I think corn prices can go. They said the average grower is going to lose money for the second year in a row, and if you want to put a number on it, they said $130 an acre. All right, again, this was late October, early November in this particular region of Illinois, which of course is one of your largest growing regions of the state. $130 an acre. And from the fall low until today, for instance, basis has improved and the market's rallied about 50 cents. And so I've seen growers with 60-cent better price for corn, and they're coming to me. And these are growers that had 250 bushel corn. All right, 250 bushel corn times 60 cents. 250 bushel corn times 50 cents, $125 an acre. Why in the world would I be wondering what I can get on the other side of this thing? And if I've already gotten my head above water, okay? Sometimes whenever the market comes to us and we get the rally that we've been begging for, what do? Nothing. We're waiting for what? Waiting for a better price. How many of you guys have swore you were going to sell at a certain price in the past, and then when it got there, you changed your mind? Has anybody ever done that? Or are you guys super disciplined in this room? And what I say is that the farmer is notorious for moving goalposts. And I'm not trying to be a jerk. I farm, guys. And I can speak resolutely about this because I've experienced it in my own operation. It's tough. But whenever we know our cost of production to a T, whenever we're marketing whatever it is we're selling, whether it's milk, whether it's corn, whether it's beans, if we know our cost of production and we know our break even, then that makes marketing significantly easier. But when we don't know those things, it's not good. Here's cash rent. Hey, they said cash rent was going to come down. You want to know what the average cash rent was for that region last year? It's $353 an acre. And you ask, well, what are guys doing? Surely it's going down like University of Illinois said. I've got a guy in my backwoods that bank told him he couldn't farm this year, 800 acres. They had a cash rent auction. One of my customers bid $430 an acre. Don't ask me why he bid it, but he bid it. And guess what the bank manager told him? He said, you were more than $100 too low with $4 corn. All right, it's crazy. Here's my cash rent story. Back in 2012, I was farming a 40-acre tract for a lady we went to church with. She told me, because it was the drought, she said she's praying for me every night. And I said, it's okay. She told me about 1954. 1954 was an epic drought. She said she remembered it put people out of business. She said, I pray for you every single night. I hope you don't go broke this year. I said, I've got crop insurance. I'll be fine. At the end of the year, I was paying her $200, paid her $100 up front, going to pay her $100 in the fall. I said, you know what? As much money as I made this year, I'm going to give her an extra $50 an acre. And she said, why would you give me $50 an acre extra? I said, because I made more money in my life than I've ever made. Boy, that was a big mistake. I'll tell you that right now. Because I wasn't farming much at the time. And so whenever we went to renegotiate, she upped me to $275. That's exactly what happened. That's my cash rent story. But hey, 2012, did we have a shortage in fertilizer? No. If we did, it was a man-made shortage. What did we have in 2012? $8 corn. Why do you think corn prices went up? When I'm buying my inputs, guys, When I'm buying inputs for whatever it is I'm doing, I'll tell you what, I've got to be offsetting on the other side of things, especially if the price of corn is high at the time. I don't want to go into a lot of detail here, but whenever we look at phosphate prices in the US, they're high and they're not coming down anytime soon. Potash prices are super cheap, but they are awfully high. But this is super interesting to me. When it comes to the producer, since 2018 to the projection of 2025, 145% increase in operating capital, interest on operating capital. How many people in the room have paid 15% on an operating note in their career at one time or another? Anyone else? Nobody? I figure a few of you have. Okay, so my dad, I talked to him about this. He got through the 80s, fortunately. It was tight, but he got through. And he told me in 1985, he paid 18% interest. Okay? And I said, well, how much money were you borrowing then? He said about $50,000. So he paid $9,000 in interest if he would have had it borrowed the whole year, of course. Guys, that was a lot of money then. I totally get that. But what is a normal operating note these days? I mean, if you know a grower in the I-states, for instance, it's very common to see seven-figure operating notes. And if you guys have to take operating note out to make it work, what is your cost of interest on what you're borrowing? Do you guys figure that into your break-evens? Because if I'm borrowing $1 million today, how much money is that? It's probably $75,000, $80,000, correct? That's a chunk of change. And that puts us in a very precarious spot. I do think it's interesting over the course of time. Fertilizer's been up 46%, chemicals up 55%, custom operations 58%. Clearly, everything has gone up. And so when I'm sitting in a room full of corn and soybean growers and someone says, man, I just wish we could get $7 corn back, I say, man, you haven't learned a thing. Because what happens on the other side of $7 corn? Bankruptcies happen on the other side of $7 corn because everything goes up in value. And whenever the price of corn goes down, what happens to inputs? They stay. And so it's a tough ball game we're playing here. Farm income is likely lower in 24 and 25 than the last 3 to 4 years, pretty much across the board, but especially whenever it comes to corn and soybeans. Given low income for grain farmers, equipment is going to be a buyer's market, in my opinion. I'm not saying that it can't get lower yet. Let's say we go to 350 corn next fall. We're not going to be talking about farm recession if we produce a big crop on top of a big safrinha crop. I think that we're going to change that terminology a little bit because I'm afraid, how many of you have noticed, and maybe it's not the same for you, but in my part of the world, there are a ton of retirement auctions this year. And so if I am an older fella, like my dad's age, my dad's 78 and he's still farming, okay? I've been trying like the dickens to get him to quit, but he won't quit farming, and that's fine. But why would I want to continue to donate my liquidity? Guys, liquidity is as low as it's been in several years. In my opinion, having all of these sales, if you will, means that supply is going to be what? Greater than demand. That is when you want to be buying your equipment. But I always say it's tough for a grower to break even without the bushels in my part of the world. And if you want the presentation, you just have to hover over it. But we've got 2 minutes. Questions?
For Matt.
And as far as this goes, you just put your info in. Nobody's going to bug you. You're not obligated to anything. You can get to the slide deck. I'll probably shoot you an email and ask if you want any other research or questions on anything. But any questions?
The USDA projection. Why do you think there was such a big change in the USDA projection?
Boy, that's a good question. Okay. So whenever I'm looking at, for instance, in the month of November, and I see that huge disparity, I automatically thought USDA has to be high on yield. Okay. When I saw the spreads didn't look like a 2 billion carry. Spreads look like a tight crop. Base is strong. That doesn't look like a big crop. That looks like things are getting tighter, right? Why did they change it 3.8 in January? I don't know, okay? But one thing I'll tell you is in December, the USDA raised demand 200 million bushels, and they took 75 of it back in January. And I kind of feel like they knew that the yield wasn't there back in November. Now, I want to be real clear. I don't want their job. That's a tough job to do. One thing I always ask growers is, do you know what your yield is on August 1st within 2 or 3 bushel? And you farm corn and beans or not? I assumed you did based on the question. And we don't know our yield that close, do we? But if the USDA is wrong by 2 or 3, we're madder than heck, and that's on 95 million acres. Okay, so I don't want their job, but I feel like this January report, with a combination of November, December, and January, it gave everyone out here a very good opportunity. Okay, but for a grain farmer, it hurt, and it hurt bad. And I'm telling you, we cost grain farmers a ton of money because of this crop size forecast throughout the fall. And then coming in here in January and taking a hatchet to it is interesting to say the least. Other questions? I'm trying to be as diplomatic as I can be, by the way. Anybody else? All right, I'm going to be in the hallway. If anybody has any questions on anything, if you want to contact me and you didn't want to take it, just shoot me an email. And then that's my risk disclaimer, so you can't hold me liable for anything that I said today. Thank you.